welcome everybody. My name is Derek Scran. I'm a realtor here in the Palm Beach County area, but I'm also licensed in California, and I can help you anywhere in the country, whether you're buying or selling. I have five-star agents everywhere that can help you. And I'm here today with my favorite lender, Peter Traum, who I've personally been through several transactions of my own with, as well as with clients that I represent. So I can vouch for him personally. He's excellent, and that's why I invited him on this video. So welcome, Peter.
Thank you. It was actually just, I don't know if you saw your 1 year anniversary and your loan yesterday.
I did. I got the email for it. Yeah. I can't believe it.
Anniversary.
That year just flew right by, didn't it?
It
Cool. So we're going to talk to you today about pre-approval. Peter, why should somebody get pre-approved?
So I guess the worst possible thing would be to go out, find a house, fall in love with it, and then find out you can't afford to buy it. So I guess that would be reason number one. You want to make sure that you're looking at homes that are within your budget. The other thing is with rates, as I think everybody knows, having moved up so much in the last year, it's more expensive to buy a house. And if you are doing this for the first time, you definitely want to have some sort of idea of what your payment's going to be, because maybe you can afford it and maybe you can get the loan, but maybe you're not going to like the payment that's associated with it with today's rate. So you want to make sure that not only can you get the loan, that the financing is assured, but that it's also going to be with a payment that's going to fit within your budget. In addition, you're probably not really going to be able to make an offer, as you could speak to, Derek, without it. You have to show the seller and their agent that you are qualified to get the financing, unless you're fortunate enough to be a cash buyer. And it's that pre-approval letter that tells them you've gone through the process and the due diligence and you're okay getting a loan.
Right. And that payment will be the mortgage, the principal, the interest, as well as a best guess of insurance and property taxes as well. What's known as PITI, right?
Right.
Right. So that a lot of people don't think about. They just think the mortgage, but there's also this thing called property taxes and insurance that you also have to have too. That's part of it as well. So people,
there's a pretty wide range on those taxes, so that's a big component of your payment.
Yeah, exactly. Okay, so as far as getting pre-approved, is there, the pros are that you're gonna, obviously you're gonna be able to know whether or not you can afford something. You're gonna make your buyer agent happy knowing that you have that pre-approval, because they're gonna be more interested in showing you houses as they know you can afford it. And then, so are there any cons to getting pre-approved?
I can't really think of any cons. I can give you a couple more pros.
Okay.
So, most people think they know their credit and their credit score, but unless they're actually having a lender pull that credit and take a look at it, the scores that you see, the credit cards all offer that free score. Credit Karma offers that free score. But they're not accurate. Okay, they can be as far off as 100 points. When I was looking for a loan a couple of years ago, I went on Credit Karma, and when I had my actual credit pulled, it was 100 points different. So you want to know where your credit actually is, and there's tons of mistakes. I mean, there's billions and billions of pieces of data out there. It's not uncommon that there's going to be a mistake. You might have an account, maybe you're a guy and you have the same name as your dad, you're a junior, he's a senior, you find you've got his account on your report, he's, missed a couple of payments, and that's impacting your credit. So it gives you an opportunity ahead of actually going out to look at homes to fix anything that might be an error or improve your score if it's necessary.
Yeah, that makes a lot of sense. And then, so as far as credit, what do you guys look at? You look at like TransUnion, Equifax, Experian, FICO. Like, what do you look at?
So the three credit bureaus you mentioned, Experian, TransUnion, and Equifax. Ultimately, when you get your full approval, we pull what's called the tri-merge credit report. We look at all three. It combines the data, but we run what's called a soft pull, just one of the credit bureaus, to do the pre-approval. So the idea behind that is we can look at the credit, but it doesn't show up as an inquiry. It doesn't have any negative impact on your credit, but it still allows us to see what you've got, share it with you, fix any mistakes, and issue you a pre-approval so you can go out looking and make an offer if you find the house you want.
That's great. And then, from my experience, I know that there's two different kinds of approvals. There's like sort of the generic approval, which is what, just based off of what people are telling you about their income and stuff like that, or what's sort of like the generic pre-approval that people get? Like, what's that based off of?
So yes, we could issue a pre-approval just based off a generic mortgage application where people input their income and how much money they have in the bank. We don't like to do that and we don't want to do it. If someone is self-employed, 100% we're going to want to see their tax returns because, the numbers can be more complicated. But when we do a pre-approval, we're still going to ask people, we'd like to see their pay stubs and their W-2s. Not that we're not trusting people, but sometimes people are just taking their best educated guess. And especially, if they happen to be tight in terms of qualifying for what they want, we want to make sure that we button it up and we're working with accurate numbers. So based on what they tell us, we'll tell them we can pre-approve you for this amount, but let's get that backup information so we can make sure the information we have in the application is accurate and what we're telling you is accurate.
Right. And so that leads me to the better type of approval, which you guys brand as the power bid approval.
Correct.
And why is that better?
So, I mean, you could go out and you can make an offer with a pre-approval, but with the market being as competitive as it is today, you want to put your best foot forward. You want to differentiate yourself from all the other buyers. You might be competing against, I've got a buyer making an offer today. There's 6 other offers in already. They're going to be number 7. So when that listing agent sits down with the seller to decide which one they're going to take, they're trying to figure out which one is the best. Well, they're going to look at things like the down payment and the terms. Do they have something to sell? Do they need to wait 60 days? Can they close in 30 days? But what the power bid approval gives our clients is it's telling that listing agent and the seller that they're 100% ironclad. We've put them through the underwriting process. So to get a power bid approval while you're out, the buyer's out looking for a home, we're going to collect all the data that an underwriter wants to see to sign off on that loan and actually submit it to our underwriters. And the underwriters are going to review their income. They're going to review their assets to see what they have in the bank. They're going to go through their credit report and issue the same approval that traditionally you wouldn't get until you'd gone under contract. So when you're making an offer and they're looking at 6 or 7 different offers on the kitchen table, there's pre-approval, pre-approval, pre-qualification, pre-qualification, approval. Well, what's this approval? What does that mean? We take the time to call the agent also and explain to them what they're looking at because they're curious. How could someone have an approval? They haven't even gone under contract, and explain to them this is something Guaranteed Rate does uniquely, is to put our clients through the underwriting process so they're solid. You're not putting this house back on the market in 30 or 60 days because someone couldn't get the loan and they got turned down. They've got the loan. They are approved. They're 90% of the way done.
Right. So all things being equal, if everyone's making the same exact offer in terms of price and terms, and they all require a lender, your offer is going to stand out better because your offer has already been underwritten, as opposed to, I would pretty much guarantee that none of the other ones have been underwritten before.
In most cases.
In most cases, that's true. I mean, I have not seen a case where it has been already. Usually it's just the generic pre-approval.
Yeah.
And then when you work with someone like Peter, in my experience, like he makes the proactive effort to reach out to that listing agent after he is aware that the offer is being made or whatever, and lets them know, or they themselves. I mean, I know when I'm looking at offers, I like to speak to the lender just to kind of get a feel for the person's finances. And in those conversations are when, Peter's letting them know that this isn't just like a generic pre-approval. This person's actually gone through underwriting and, this is pretty much good as gold, assuming that nothing else changes about the whole situation.
Right.
And I also understand that, interestingly enough, from the time that you get them everything they need. So in order to get this, you have to supply like your pay stubs, tax returns, like things like that. That once they have all the information that they need from you, that they can't move forward without, once they have all that, I think it only takes like, 48 hours to turn.
24 to 48 hours,
Yeah,
at the busiest. I don't think we've ever gone beyond 2 days. And we've been doing this for, I don't know, it's got to be coming up on 3 years now. And I can't tell you the number of times that it's made a difference.
Mhm.
and that the listing agent has said, we accepted your offer purely because of that power bid approval,
Yeah.
because it was the one thing that distinguished your client from everyone else, and it gave them comfort that they weren't going to be going back through this process in 60 days, finding out that someone couldn't actually qualify for the financing. It makes a big difference.
Right. So I would say if you're a serious buyer, you know you're going to buy something and you don't want to have any surprises down the road, I would definitely recommend, facilitating this process so you can get that approval, because that way you'll know exactly where you stand. You won't go into contract on something, get your hopes up, and then like a week or two later realize like, oh, there's a snag with the finances. This thing isn't going to work, because it's just going to pull all the wind out of your sails, and it's going to
Yeah,
be
it's peace of mind for the buyer as well. Absolutely. As the
yeah,
person doing the house, you don't want to be disappointed and get a surprise later too. You're
that's
absolutely
it.
right.
It's a bummer for everybody. It's a bummer for the buyer. It's a bummer
Yeah.
for the buyer's agent who had to do all that work. It's a bummer for the listing agent and their sellers and everything. So I would just recommend that you do it. I think the only con against that would be, but it really isn't a con if you're definitely going to buy a house, is that when you get that power bid approval, you're actually having a hard inquiry on your credit. So it will show up as an inquiry on your credit.
Correct.
It's just sort of like your generic pre-approval, which is more like a soft pull on your credit, which doesn't show. All
Yeah.
right, Peter. Well, thanks for walking us through the pre-approval process.
Sure.
Yeah, I really appreciate that. And obviously, if you have any more questions, you can reach out to him directly. You can reach out to me, and I'll connect you guys. But definitely, I mean, a lender can make or break a deal. It's so important who you choose as your lender. Please don't just use an internet lender. That's the other point too I want to make about pre-approvals. Don't use an internet lender. Use somebody that your agent personally knows and trusts, because it can really make or break a deal. I know that from experience.
Right.
I've never had a deal fall through with Peter before, and I trust what he has to say. So I'll leave you with that tidbit. So on to the next one. See
All
you.
right. Thanks for having me. Have a
Yeah.
good day.
Uh-huh.